Palantir stock is dropping in the after hours. Are you going to be a good soldier and pick up and buy the dip on this one? Or are you going to start taking some profits? Because I tell you what, over the last year, Palantir stock is up over 233%. And year to date, up 46%. So there's a lot of people sitting on some big time gains after the company reported their Q1 earnings, which came in at $634.33 million. We'll go through the financials. Company has been scaling up very nicely from a revenue perspective. Gone are the days of exponential growth, but you're getting solid 20% growth in this quarter, and it looks like projected out kind of low 20% growth. Not only are they growing that top line relatively nicely, they're also scaling up nicely from a cost perspective. I'll show you that from a profitability perspective, also from a cash flow perspective. We'll also come over and look at this one technically, since really over the last year it's been trading in a beautiful technical pattern. I think if you get this one at the right price, there's certainly some opportunities to make money. Now, we also got guidance for the upcoming quarter, the Q2. Revenue expected to be between $649 million up to $653. This was actually a really nice guidance, given that Wall Street estimates was for closer to $643 million. The high end was pretty high, up over $668 million. So they're not going to meet that. But this revenue guidance gives you a lot of confidence in this company for the upcoming quarter. Also, when we go through the Q1 results, you'll see they're controlling costs relatively nicely. So you can expect a fair amount of profit coming from this revenue guidance. And I tell you what, this is a company that needs to put up these types of results, because it doesn't matter which way you look at this company from a forward earnings perspective, you're trading close to 70 times. Even on a revenue basis, where they're expecting revenue for the full year to be about, we'll just call it $3 billion if they surprise to the upside, you're trading over 15 times sales, not 15 times earnings, 15 times sales on this one. So this is a stock that has to just continue to deliver. There's really no margin for error, as it's fully valued already, and you need the stock to continue to prove itself just to maintain the current valuation, let alone see expansion into the future. And speaking of the future, Wall Street analysts' estimates are for low 20% growth out into the future, and I don't think anything that the company reported in the most recent quarter has you expecting anything less than that. Over the last year, you saw your revenues grow from 525. This is the revenue side. Your gross profits are down here. You went from $525 million up to $634 million. That was that 21% growth year over year. Now, what this company has done a very nice job is you've seen massive revenue growth, over nearly $110 million added to the top line revenue. But look at your operating expenses. Your sales and marketing didn't actually move a whole lot over the last year, from 187 up to 193. Your research and development continuing to tick up, but they've got a lot of new products and a lot of things in the works. You went from 90 million up to 110. And here's your general administrative line. Very nice. That actually went down from 136 down to 133. More mature company. These lines were growing exponentially in the early days of this company. Now we're seeing the costs start to flatten out. They got the headcount right. Everything firing on all cylinders. Look at your total operating expenses over the last year. 413 up to 437. That's just a $24 million jump. And again, I noted that they averaged or added over $100 million to that top side. So your income from operations are going to blast off over at this company from just $4 million last year all the way up to nearly $81 million. They have a lot of cash sitting on the balance sheet and basically no liabilities. So they actually collect a fair amount of interest in this high interest rate environment. So that's going to bolster up your net income from 20 million up to 106 million this year. But I would really just focus on this income from operation line. Also factor in, we're moving into revenue into the mid 600 millions, and you got to expect these expenses at 437, maybe they tick up a little bit more next quarter, but you're going to print a really, really solid line, maybe close to $90, $100 million to that income from operations. But I want to remind you again, $100 million to operating profit is great for this company if it was averaging a $5 billion valuation, but we've got a $52 billion valuation on this one. So it's got to put up these types of numbers in order to maintain and even push up that valuation. We'll get to stock-based compensation in a bit, but part of these expenses is not actually cash. It's actually shares of Palantir. And we'll talk about that more in a moment here. Balance sheet, like I talked about, they got a mountain of cash, over 3.8, nearly $4 billion in cash. You come down here to the total liability side. I mean, it's basically nothing. This is as tech balance sheet-like as you can get. So this company has nothing to worry about from a balance sheet perspective. And even when you look at kind of the operating income and the operating profits, nothing to worry about except the high bar that Wall Street has for the shares. The stock has been completely pumped up from a valuation perspective, and so that is the hurdle they have to jump. They don't really have anything to worry about financially, at least from balance sheet kind of operating standpoint. From a cash flow perspective, we have seen over the last year your net cash provided by your operating activities down from 187 down to 130, but most of that had to do with the fact that they had this larger than normal accounts receivable line, which I don't particularly mind. It basically, that also is going to show up here on your balance sheet. Here's your accounts receivables. Notice last year you had 364 and it ballooned to 486. More than likely, these are contracts, maybe from the government or something like that, that cannot be paid until maybe the services are rendered or the software is delivered, or over a period of time. Maybe it's a 12-month or a 24-month contract, and you're getting pieced out every other month or every 6 months or every year. And so I don't really mind that, but it does impact your cash flows since you can't recognize accounts receivable as cash. So you actually have to minus it off here. Now, the other thing that we'll note is your stock-based compensation came in at 125 million. Last year was 114 million. The company doesn't do a whole lot purchase property, plant, and equipment. It's a really asset-light business. So the higher and higher they can grow these revenues, higher and higher they can run these operating cash flows, well, it gives this company a pretty healthy amount of cash to do kind of what it wishes, if you will. Now, over the last year, they have bought back the stock. They implemented a buyback, I think it was not too long ago. But what you have to understand is there's buyback net of the issuance that they do for the employees. So yeah, you notice over the past 3 months, you issued 125 million shares or $125 million worth of Palantir stock, and you bought back 9 million. So the buyback is okay, but it really just cancels out only a portion of what they're giving to the employees. And we're not asking them to stop compensating the employees in that manner. You just have to keep that in mind. This is not like an Apple buyback or a Google buyback where they're actually physically retiring shares. In fact, you can come up here and see the weighted number of shares outstanding over the last year went from 2.1 up to 2.2. So despite the buyback, they're still increasing the shares because the stock-based compensation outpaces what they're buying back. Again, this is not Google, this is not Microsoft, this is not Apple. But you wouldn't necessarily expect that. Overall, over the last year, you had a net decrease in cash, but nothing to be concerned about at all with this company. Things are looking very, very good financially. Now, things are actually looking pretty good financially from a technical perspective. Look, the shares were up 8% during the day, and now I'm seeing in the after hours they're down 8%. So you basically just round tripped over the last day. If you really focus on the price action just over the last year or so, you are making a beautiful, this is on a weekly chart here, higher high, higher lows. Probably would have liked to see us push to new highs in the after hours, get up to this $29-30 on Palantir. Really would have confirmed this uptrend, but nothing in today's price action. You certainly didn't have a big kind of gap down and crap below a key area of support, which we have marked out here on a red line, which I'll change to maybe a beautiful purple shade. This area right here at $20 and some change, you probably just round it off right at about $20. Wouldn't want to see Palantir get below that. So as long as you maintain kind of a share price above 20, I'd assume that this technical pattern is going to stay in play. Now, I want to show you one last thing. Since this company has not been public for a while, but people have been kind of pumping this really since the beginning of time, and I'm going to show you a fixed range volume profile. It's going to give you some sense that there was actually a lot of accumulation in these shares right at this price. So what this volume profile does, you have volume usually on the bottom of your chart, but this volume profile does a very nice job showing you aggregate volume at certain price levels. And you'll see with Palantir right where the shares are right now, right when this stock kind of went public, it was right during that kind of like 2020, 2021, YouTube guys kind of just pumping the crap out of the stock. A lot of people piled into that. Now, some of those people have likely sold. They bought high, sold low. That's what a lot of people do. but there are still going to be people that holding onto these shares. And so you're going to see some selling pressure. These people have finally gotten back even after 2-3 years of holding this stock. They're not going to feel like the people that timed this one relatively well year to date over the last year that are up absolutely huge. So the fact that the stock is getting rejected at 25, no big deal. As long as you hold the $20 level on Palantir, eventually you churn through this volume, enough buyers step in, and you make a new high, probably back up into the $30 range. All of this, though, in the context that you've got a $52 billion valuation on this one. It's probably going to slide back a little bit tomorrow. You've got a massive forward multiple on this one, earnings and sales. And so the company has to deliver. This isn't one of these stocks where they put up a good quarter and everybody goes and celebrates. Actually, they put up a good quarter and everybody breathes a sigh of relief because this company has to show it every single quarter. Otherwise, you'd see the share price get cut very quickly. But fundamentally, things look good. And certainly if you've timed it right, you've probably made a little bit of money on this one. That was Palantir. We'll be back. There's a ton of earnings this week, so I'm going to save my voice and be back with you again later. Good luck with your investments.